I'll be sharing my screen now. Is my screen visible?
Yes, sir.
Okay. Himani ma'am has already talked about 6 attributes that is very much necessary not only for the Demat accounts, but that is also necessary for the purpose of the trading account. With any of the broker you have opened your account, you have to get all those 6 parameters: name, address, PAN, mobile, email, and income range to be updated with the brokers as well. If, for example, you have Demat and trading account with us in both the scenarios, if you are updating in Demat account, we will take care of that for your trading account as well. We have to update that thing with the exchanges also. Now, I'll be talking about major change that everybody is talking about is the margin requirements. You must have got news everywhere talking about exchanges have increased the margin. The fact is, exchange has not increased the margin at all. The thing is कि पहले जो स्टॉक ब्रोकर्स थे वो आपको 100% margin limit खोल देते थे based on the holding that you are giving as a margin to the stock brokers. Now, as per the SEBI rules and regulations, stockbrokers may not be able to give you 100% benefit of the stock if you are keeping only stocks as the margin with the broker towards your trading activities. There is a small illustration that we have made over here in this. For example, today whatever transactions you are doing with the broker for with us, and your gross exposure requires margin for 2 lakh rupees. Now, earlier, if you had given stocks worth 2 lakh or more, that could have been considered as the margin. But as per new norms, we can consider only 1 lakh rupees of worth of your stock only towards your total margin requirement. Remaining amount shall be with the broker in the form of cash. Cash means your credit balance in your financial ledger. So this is a major update that many investors are thinking how it is going to change their working. Another important feature is the stock margin pledge. Earlier, all the traders used to provide stocks to the brokers by way of off-market transfers in their beneficiary accounts. Stockbrokers used to show whatever you're holding standing in the beneficiary account through their back office accounting and statements. But SEBI, through the circulars as mentioned below, have said that all the beneficiary accounts opened by the stockbrokers are needed to be closed, and no share shall be physically transferred to any of the stockbrokers to meet with your margin obligation. Now you can pledge your holding with the stockbroker. Stockbroker in further repledges those holdings to the exchange. Whatever holding stockbrokers repledges to the exchange, based on that, exchange gives the margin benefit directly to the client level. It doesn't give benefit to the brokers. So if you are trading with Abhipra and you have pledged the shares with Abhipra, Abhipra will further pledge it to the clearing corporation, that is exchange, and when Abhipra will repledge it to the exchange, exchange will come to know that certain shares are there for respective trading client code. Based on that, they will give you margin benefit for the shares pledged with the exchange. Why was it done? SEBI wanted to have everything transparent. There were certain blackfishes in the industry and had resulted losses to many investors working with them. So exchanges, regulators have decided that no stock should be given physically so as to maintain the complete transparency. And another major benefit that the investors get out of it, that in case of any of the corporate actions or corporate action benefits given to the stock held by the investors were earlier going to the brokers, and then brokers used to give it back to the investor. Now, since the account, those particular holdings are lying in your own Demat account and are only pledged towards the margin, the corporate benefit directly comes into your Demat account. There is no hassle of reconciling the corporate benefits now anymore. Similarly, dividend. Earlier, dividend used to come to the broker and brokers used to reconcile everything and give it back to the investor. Now, these reconciliations are also not required because dividends are directly credited to the investor's bank account, whichever is whatever bank account is registered with the Demat account. Another important thing that SEBI has recommended for all the stockbrokers working in this industry, that stockbrokers are required to settle all the running accounts of their clients at least once in a quarter. Quarter means 90 days. And clients have the option either to ask for these kind of settlement in a monthly basis or a quarterly basis. So if you select monthly, then Abhipra will be settling your account on a monthly basis. Many times, clients do not want to maintain a running account with the brokers or Abhipra. In that case, you can also opt out of the running account maintenance, and whenever the payout comes, that payout will be directly transferred to your bank account. That would be called as day-to-day basis settlement of your funds and securities. Now, whatever I talked about finance, funds is also applicable to the securities. So, whenever you are buying, we are required to settle not only funds but also securities. We cannot keep the securities for long with us, and we need to give it back to the investors. The securities which are pledged will not come under this purview because earlier stocks used to be with brokers, so brokers had to give back the securities to settle. But for the stocks held with Abhipra, if margins are there, that many stocks we used to keep based on the margin obligation running in that particular account, client's account. Now, since stocks are under the margin pledge facility, so margin pledge will continue, but for all the shares you purchased or sold through us, no holding will remain with us, and we have to settle everything in at least in a quarterly basis. I would like to further say that whatever the regulators' requirements are, we are meeting with that, and we are trying not only once, whenever possible, we are settling the accounts of the clients, maybe twice, thrice, whenever the position is possible, and client is not trading with us, we are settling the accounts of the clients as per the requirements. Another important factor, just to maintain the transparency, SEBI has also asked all the intermediaries, including stockbrokers, to execute whatever the trades are with the client who are giving, who are trading offline through telephone calls. We need to maintain the call recording for a certain period, as mentioned by the SEBI in their circular. So we recommend all our clients to not to call us on the mobiles. Many of the trading clients are having direct contact for the dealers. We are recommending all our investors to make the call only on the designated call lines, so we can go with the requirements of the regulators. This further enhances the transparency. In case of any fault of any of the dealers working over here, we can monitor those based on these call recordings.